This is the Do-It-Yourself Guide to Business Buying. Today we're talking about the offer letter. Welcome, business buyers. What is our goal with this video, offer letter? Well, I want to walk through the creation of an offer letter. Now, example letters are available on the Do-It-Yourself Business Buying site, but I also want to, in this presentation, create an offer letter checklist. At the most basic level, business buying is a numbers game. I mean, only 1 out of 10, sometimes 25, maybe 50. Hopefully not 75, but a lot of businesses have to enter our funnel before one ends up closing. And we also know that if we find a deal and we want to close that deal, that we have to cover a lot of ground. Furthermore, once you find the deal, time and effort is needed to move it along the process, right? And by the time we get to the end, the amount of time and effort we've put in is substantial. That means we really want to avoid wasting time on deals that are a near miss, that get close to closing but don't quite make it. How do we make sure we don't? Well, one thing that we want to do is learn all we can about the business. I think we're pretty good at that. We have discovery, we request financials, we do analysis, we're looking at valuation. So I think that part is covered. But we also want to learn all we can about the seller. I don't think we're quite as strong on that end. And we want to learn as quickly as possible. So when is the right time to submit an offer? In my opinion, it's at the earliest feasible time. Why? Because the seller reaction to that initial offer can reveal so much about that seller's position on deal terms, where they're at, what their expectations are, how much flexibility they have. So the timing to submit an offer is as soon as feasible. Now, we don't have the ability to submit it right away because we need to do some stuff first. The deal had to be originated. We had to set up a seller meeting and screen the deal, get the financials and analyze them, value the business, structure the deal. And we had to have gone out to find the money. Let's talk about that one for a second. Does the money need to be lined up before you submit an offer? In my opinion, the answer to that is yes. Well, I'll qualify it this way by saying at least one viable funding source really should be identified before we start sending out offers. I mean, it's late to start looking for money with a blank sheet of paper, starting from scratch after submitting the offer letter. So we want to at least have some funding sources lined up prior to sending out these offer letters. Let's go through a checklist for an offer letter to help us prepare that offer letter. I want to address the following issues. Number one, don't forget to mention the offer is legally non-binding and subject to further negotiations, leading potentially to drafting and signing a definitive purchase agreement. This is so important. You have to stress that the offer is legally non-binding. Number two, certain parts of the offer letter are legally binding when mentioned. For example, confidentialities, the parties agree not to disclose confidential information shared during negotiations. That should be in there. Exclusivity. If an offer includes a period during which the seller cannot entertain offers from other potential buyers, we don't typically put exclusivity in the offer. We do in the LOI. And in that case, it's going to be legally binding. Governing law. Clause stating which jurisdiction's law will govern the interpretation of the agreement. Clarity is a high priority. A well-written offer doesn't require an explanation. It's clear and to the point from the written word. That should be our goal. We don't want to be in a situation where the seller doesn't understand the offer and we have to explain it to them. Number four, we want to draft the offer with business language. I mean, a lawyer should review your standard offer letter, but we're talking about the non-binding parts of an agreement. It's just business people negotiating business terms in business language. I mean, anything legally binding should be drafted or reviewed by your lawyer, of course. But in terms of the non-binding parts, I don't think we want to get into legalese too early in the process. So simple written business English is my preference for sure. Number five, the offer letter is addressed to the sellers. If there's a broker involved, however, it needs to be sent to the broker. So if it's a broker deal, don't send the offer letter directly to the seller. Don't bypass the broker. You end up with a broker who's fairly annoyed if you do that. I mean, sending by email is fine, a paper copy to follow. The call to present the offer is optional. I guess the more complicated it is and the more little tricky bits that are in there, the more preferable it is for you to be able to get on the phone and walk through that offer. But it should be perfectly clear without you doing that. Number six, use the legal name of the target business, but reference any doing business as names. Make sure that's all very clear. If there are multiple businesses and different ownership groups among those businesses, you do need to reference that. And in fact, if it's too complicated, you may require more than one offer letter in a very complicated structure. Usually it's pretty straightforward. It's one business, sometimes two, but once it gets too complicated, you need to add a second letter. Number 7, reference whether you're buying shares or assets of the business. Why? Because the seller changes depending upon whether it's the owner selling the shares or the company selling the assets. So we're literally addressing the offer to two different entities depending upon whether we're selling the shares or selling the assets. Number 8, make sure you incorporate the percentage of the business you are buying. 100% if you're buying the whole business, or some lesser percentage if you're buying a part of the business. Don't forget to include that. Number 9, determine if you're using an earnout in your structure because it changes the main sentence. If there's no earnout, the opening sentence is very simple. We're pleased to offer you XYZ for 100% of the shares of the business, or whatever it happens to be. That's not necessarily the very first line, don't get me wrong, but the main thrust of the offer is that statement. If there is an earnout, however, the language changes slightly. Now we say we are pleased to offer you up to $2 million, XYZ, whatever it happens to be. We're not promising $2 million, we're promising up to $2 million. Number 10, start with the total consideration of the purchase price that's offered. Many people bold the monetary values that they include in an offer just for clarity purposes, and the total consideration or purchase price number comes first because it frames the remainder of the numbers. 11, explain the breakdown on how the seller is going to receive the total consideration or purchase price. There's really just 4 ways. You're going to get it as part of a closing payment on the day of closing, a seller note that's paid over time, an earnout that's based conditionally on the performance of the business, and number 4, financial debt that is transferred or inherited by the buyer. If there is financial debt on the balance sheet and the buyer is going to inherit it, that is part of the purchase price that's being paid. Now, we don't have all 4 in every deal by any stretch, but check them off, include the ones that are relevant for your deal. In terms of closing payment terms, it's pretty simple. It's just the amount of the closing payment. You reference the fact that payment is going to be made on the closing date, and of course, how the payment's going to be made, whether it's wire transfer or by some other means. In terms of seller note payment terms, they include the total amount of the seller note, the length of the term, how long is it going to take you to pay it off, 3 years, 4 years, or 5 years, the frequency of payment, are you going to pay it monthly, quarterly, yearly, and of course, any interest payable on the unpaid balance. If you're negotiating an earnout, the earnout terms include the maximum amount that can be earned out. We always put a max on that. We want a cap on our offers. And the limit on earnout payments. Is there a yearly limit, or is it just a limit in total? And that's actually quite an important consideration. Number 3, the metric that the earnout is going to be based on. Is it going to be based upon the EBITDA of the business? Once the buyer owns it, the gross profit, the revenue, and of course the trigger amount when the earnout kicks in. Make sure all of those are addressed in your offer letter. Number 15, financial debt inherited. That's money that's been borrowed that needs to be paid back, where there's a principal balance and interest due. If you inherit financial debt, that is part of the purchase price. You're going to deduct that financial debt from the enterprise value to value the shares, which is what the seller is going to receive. Now, this financial debt inherited does not include liabilities. Those are unpaid bills. That's basically when we buy things on credit, whether it's services, materials, anything that we accrue from a current liabilities perspective, an unpaid bill. Yeah, we typically treat those as liabilities, not as financial debt. And so they aren't deducted. They don't form part of the purchase price, but financial debt does. Income tax due, typically is treated as financial debt as well. Obviously, this is important and we want to get it straight if we are inheriting financial debt when we buy the business. 16, we want to mention a peg value for the net working capital, which is current assets less current liabilities. The peg net working capital should reflect normal working capital of the business. So do mention that a net working capital peg value will be worked out. Indicate that the exact balance, of course, is going to be specified in the LOI. It's too early for the offer letter, but do reference it. And be sure to stress that it's subject to the buyer and seller's mutual agreement, just so the seller doesn't think the buyer is trying to impose this number on them. 17, the transition period should be addressed. Mention how long the seller is expected to remain in the business. Mentioning, of course, that final term, responsibilities, and compensation will be mutually agreed upon. Again, we're not trying to be too definitive in every term in our offer letter, but we do want to indicate that this is something that is going to be addressed once we get to the LOI stage. 18, consider including an expiry date in the offer letter. An expiry date of 2 weeks is often used in smaller, uncomplicated deals. The larger and more complicated the deal, typically the more we have to extend the expiry date on the offer. Now, it can always be extended if need be, but it does provide some focus. And not everybody puts an expiry date in their offer letter, but many people do as well. 19. Include any conditions that must be met before the deal is finalized. So we're going to outline the conditions, due diligence, determining regulatory compliance, etc. In some cases, licensing requirements do need to be sorted out before closing is possible. The closing part of the letter should broadly specify next steps in the process. That might include due diligence, agreeing on remaining terms, signing an LOI, etc. In some cases, licensing requirements need sorted out before closing is possible. So do mention those. 21. Indicate that the letter of intent will address additional terms. Things like breakup fees, exclusivity period, and non-compete agreements are important. They will make the LOI, but we don't typically include them at the offer letter stage. Emphasizing, of course, that the terms will be reached through mutual agreement between buyer and seller. Again, we don't want to give the seller the impression that we're going to be imposing things on the seller. Number 22, do include a signature line for the seller to sign the offer letter. Signing that letter reinforces commitment and helps to build momentum. Signing also legally obligates them to the legally binding clauses that were mentioned earlier, so we do want to include signatures in our offer letter. I want to sum up and say that being offer-centric, I think, is a really good approach to business buying. While we don't pass out offers like candy, that's not what I am referring to at all. But focusing on an offer gives business buying a real structure and an early milestone. I think especially in the early going, we should be filtering everything in our mind. Is this going to help me put an offer in front of the seller? That's what being offer-centric is all about. So getting completely comfortable building an offer, that's our goal with this presentation. The next video is going to cover negotiations. So let's get after it. This is the Do-It-Yourself Guide to Business Buying. Today, we've been talking about the offer letter because we want to learn and grow as we go. Thanks for watching. We'll see you next time.